Well, good morning and welcome. You're watching Market Cafe on ET Now. I'm Harsh Saita and with me is Ankita Saxena. On this show, we take you through all that's happening in global markets, give you a quick catch up on various announcements with regard to Indian public companies as well as Indian business news and global news. Ankita generally takes a section where she takes you through all that's happening in global markets. Ankita, good morning.
Good morning to you, Harsh, and good morning to everyone. Now, Harsh, the stocks took a beating yesterday in the US and European markets because there's no conclusion that's really coming out of the debt ceiling meeting that's going on, and even the Republicans questioning the June 1st for the debt ceiling deadline date that Janet Yellen has given. And on the back of that, we did see the stocks taking a beating in the trading session. The stocks fell yesterday as the ongoing debt ceiling discussions appeared to yield little progress. The S&P 500 dropped 1.1%, the Nasdaq Composite pulled back 1.2%, and the Dow Jones Industrial Average lost 231 points or was down more than 0.5% in trade. Even in the European markets, the stocks were battered. The Pan-European Stock 600 index closed more than 0.5% lower, with the sectors mixed across the board. The Eurozone Composite Purchasing Managers Index numbers also came out. For May, it showed solid growth that continued to be driven by services, with manufacturing hit by weak demand and a fall in selling prices. FTSE was up 0.1%, DAX down 0.4%, and CSE was down 1.3% in trade. So a negative global handover coming in there, Harsh.
Well, yes, and on the oil front also slightly negative when it comes to oil prices because they've risen up a little bit. Before I take you through the prices, let me tell you what the reasons are. There is a larger risk now that crude prices will actually rise. Firstly, there is an OPEC Plus cut which is to take effect, so that is all set to happen. And the other piece and impact oil prices. Let me add to that. And the other piece that's roiling currently is that the Saudi oil minister told short sellers that it will not be a good time for them. He will leave them ouching, is what I quote unquote. And that probably alludes to the fact that there could be a reduction in production going forward as well. So he doesn't rule that out either. And on the back of that, you can see oil prices have gone up. You've seen WTI just below the $74 a barrel mark, and we are seeing Brent above the $77.5 a barrel mark. So steep price rise with regard to oil. Keep an eye out for that to keep a check on where that's going.
All right, Harsh, we will keep an eye out on oil, a very important key point for the markets. Let's move on and quickly look at all the events that you need to keep a track of in today's trading session. Of course, we have the Fed policy meeting, which is going to happen today, which is 24th of May. We have the UK CPI numbers that will be coming out. The US crude inventory number is also going to come out today. And of course, in the earnings calendar back home, we have Hindalco that will be coming out with its quarter 4 earnings. On the 26th of May, we have Grasim, Sun Pharma, ONGC, M&M that will be coming out with their numbers. And on the 30th of May, we have Apollo Hospitals that will be reporting its quarter 4 numbers. In the corporate actions, we have JB Chemicals that will be considering a stock split of equity shares. We also have Shares Shipping that will be considering a voluntary delisting. Borosil Renewables will be considering raising funds, and we have IRFC that will be approving the market borrowing program in FY24. So these are the events that we will be tracking very closely.
Right. Track all of that in today's trade and more, of course. But at the moment, we're going to be tracking what's happening in global markets and global news. Let's take it straight to the debt ceiling. Yet another day of no results. House Speaker Kevin McCarthy walks out of the US Capitol building saying the two parties are yet to reach a deal to avert a first ever US default, with more meetings planned here on. Republican Representative Garrett Graves, one of McCarthy's chief negotiators, suggested just hours after the meeting that the two sides were at a standoff.
New home sales jumped to a 13-month high in April, boosted by a persistent shortage of previously owned houses on the market and a sharp decline in prices from last year's lofty levels. Figures were up 4.1% to an annual rate of 6,83,000 in April from a revised 6,56,000 in the prior month.
Well, and streaming giant Netflix expands its password crackdown across countries, urging users to not share their accounts for free. The website said it was issuing mails to users in as many as 103 countries, including the United States, Britain, France, Germany, Australia, Singapore, Mexico, and Brazil.
And Apple has announced a multi-billion-dollar deal with Broadcom to develop 5G radio frequency components in the United States. The company says its deal with Broadcom is a part of its 2021 commitment to invest $430 billion in the US economy. The move marks the latest phase of a partnership between the two companies, as Broadcom announced it would sell $15 billion in wireless components to Apple in 2020.
Right, and we have Virgin Orbit, linked to British entrepreneur Richard Branson, of course, is selling its assets and would cease operations. The announcement came about 2 months after the company filed for bankruptcy and laid off about 85% of its staff. The company sold $36 million worth of assets to Rocket Labs, Stratolaunch, and Vast Space.
And Bernard Arnault, the world's richest person, wipes off $11.2 billion from his fortune in one day over concerns that a softening US economy will dampen demand for luxury goods. The founder of LVMH, whose offerings include Louis Vuitton handbags, Moet de Chandon champagne, and Christian Dior gowns, had seen his wealth balloon for most of 2023 as share prices of European luxury companies surged.
And the latest company to announce layoffs, Alibaba. The company will be cutting almost 7% of its cloud unit. Alibaba will offer severance to employees or transfer them to other parts of the Alibaba empire, although moves are not guaranteed. The primary objective of these measures is to streamline the cloud services business.
And a street in Australia has been officially renamed as Little India. The Prime Minister stole the show in Sydney with Indian diaspora giving him a standing ovation. Modi said the strongest and biggest foundations of India-Australia relations are mutual trust and mutual respect. And the real reason behind this is the Indian diaspora. Albanese and Modi also announced the inaugural advisory board for the Central for Australia-India relations, while India will also open a consulate in Brisbane.
मैं जब 2014 में आया था तो आपसे एक वादा किया था। वादा ये था कि आपको फिर भारत के किसी प्रधानमंत्री का 28 साल तक इंतजार नहीं करना पड़ेगा। तो लीजिए, यहां सिडनी में इस ऐना में मैं फिर हाजिर हूं। आज दुनिया की सबसे बड़ी और सबसे युवा टैलेंट फैक्ट्री जिस देश में है वो है सही जवाब दे रहे हैं आप, वो है इंडिया।
Well, the Prime Minister can definitely set the stage on fire, can't he? But with that, we'll slip into a very short break. Do stay tuned. We have more on the other side. We'll go into Asian news, track all Asian markets as well as domestic news. Welcome back. You're watching Market Cafe on ET Now. What we're going to quickly do is take a stock of what's happening in the Asian basket. Well, the handover was not exactly positive, as Ankita did put it across. The other reason, or the possible reason why the handover was not positive, is because we've seen the 10-year and the 2-year yield spike up, and that's understandable, right? You have the uncertainty around the debt ceiling, and that will keep bond yields slightly elevated. 3.7%, probably the highest bond yield that we've seen on the US 10 years in the last couple of months. So keep an eye out on that, and that will keep a lid on Asian markets as well. So we're seeing the Nikkei, which is down around 1% or thereabouts. We're also seeing negative on the Kospi, but just a slight negative bias, largely flat. We're seeing the Hang Seng down 4/5% or thereabouts. We're seeing the Shanghai also lower by around 2/3%. And lastly, the SX 200 that is also lower in early trade. So across the board, we're seeing red, at least at the moment. The SGX Nifty 2 down around 2/5%. The recent rally is also possibly keeping pressure on the markets. But at the moment, we're expecting a negative start from the Nifty, at least the way we look at it. It's down around 2/5%, so just below that 18,300 mark, at least at the moment. But of course, closer to the start, we'll have to see. We've seen recoveries happen over the last couple of weeks, possibly hopeful of a recovery even today, Ankita.
Absolutely, Harsh. Here's hoping to a good recovery after a negative start that we're expecting. And we'll move on to the domestic front now. India will remain a shining star amid global uncertainty. That's the verdict coming in from the biggest market makers, Sunil Singhania and Prashant Jain. So where are we headed from here? And where will the leadership emerge? Somit gets us the lowdown of all the wisdom that these market veterans shared on ET Now. Take it away, Somit.
Well, Prashant Jain and Sunil Singhania, both the market makers, are confident that India is gaining importance globally, and as fund managers are shifting investments from China, India is one of their preferred and considered bet according to both of them. Now on valuations, they're also saying that the valuations at current juncture are looking reasonable. And what's next for market? Now at this point, both the market makers are not confident that there would be a next leg of rally post the current rally that we have seen. They are saying, especially Prashant Jain is saying that he sees limited room for further upside, and he's seeing that returns from here on would be on track with earnings and GDP growth, while Sunil Singhania is confident that he's not expecting a big decline at this level, but he's also not confident whether there could be a next leg to the current rally. Now, one sector on which both the experts spoke, and that was the banking sector, while Prashant and Sunil here both are betting on big banking names, and Prashant is specifically saying that he would prefer large banks with a strong digital footprint and high CASA ratio, while Sunil Singhania is also betting on large banks, and he's saying that structurally for the next 3 to 4 years, financials will play a major role. Now, other than banking sectors, they also spoke about host of other sectors, specifically for Sunil Singhania. If you see, he's bullish on the IT sector. He's saying that they generate strong cash flow and they distribute 80 to 90% of this cash flow, and he's also positive when it comes to the consumer discretionary space and on the steel sector. While Prashant Jain here, he's very bullish on the power sector. He's saying that even post the current rally in the power sector, he's expecting further re-rating when it comes to the power sector, and he's saying that the India's per capita power consumption continues to remain low, and hence power consumption is expected to rise, thereby power sector will benefit. And consumer sector is one sector where Prashant Jain is kind of having a negative view, because he's saying that this is one sector that has not derated further, and he's expecting some downside here. And when it comes to defense sector, he's saying limited room for upside. He's saying that the earnings growth for defense sector could be around 10 to 15%, and that's what is the growth he's also, and that is the kind of returns that he's expecting from defense sector going forward.
Right, thanks for that, Somit. Interesting take. But let's go, while we are at it, go to Prashant Jain, director at 3P Investment Managers. He states that markets have been flat in the last 18 months or so, and that has led to moderation in multiples. Let's listen into his views on the domestic and the global markets, as well as the banking space and the defense sectors.
So I think yes, if you look at markets, last 18 months have been flat. They've been range bound, and that has led to, the time correction has led to moderation in multiples. And even globally, interest rates seem to have peaked, at least for the time being. I mean, I'm not an expert on that. So I do think that the risks have slowly got addressed. Valuations have turned reasonable. So I would say these are fairly valued markets. But still, I would say there is not much room for multiples to go up, at least in aggregate terms. So I would say broadly, returns should track earnings growth or nominal GDP growth.
When you're saying valuations are looking reasonable, I'm assuming that you are looking at historical benchmarks?
Yes, if you look at, in terms of PE multiples, typically I think 1 to 2 years forward. So in 3 months' time, we'll all start focusing on fiscal 25. So I think based on fiscal 25, markets are trading between 16, 17 times, which is reasonable, which is not cheap, but it is not unreasonable either. I would say things are just about okay.
Is it a good idea to look at historical benchmark, because history and these conditions, when these P multiples were there in the past, the conditions were very different. Liquidity, underlying growth of the economy, global interest rates. So is it a good idea to look at historical benchmarks and talk about valuations?
So when I look at historical benchmarks, I look at typically a 15-year average, because that does cover 1.5, 2 cycles. And if you look at 15-year averages, I think we are slightly above that. Our growth rate should improve hopefully as we go over the next few years. I think India is acquiring more and more prominence, visibility globally. It's becoming a large, fast-growing economy. Geopolitically, I think we are in a good situation. We are a good boy in the world.
You've been a big advocate of banks, and especially banks, big banks and banks which have a strong CASA and a big balance sheet. Now that trade has worked like a charm now. What was more like a consensus view has now become a consensus trade, which is overweight financials. But do you think even though it's a consensus view and a consensus trade, the consensus prices has not reached there?
So I think, yes, most people agree now that, and the stock prices have moved sharply. So most people agree that banks are in a sweet spot. Balance sheets are very clean. Trade growth is reasonable, and profitability is holding up well. So I would say these banks should continue to do well. And the gap in valuations across banks, the earlier what we used to call the retail banks and the corporate banks, that has now converged. And actually that divide is becoming less relevant now, because the asset side of almost all the large banks is increasingly looking similar to each other. So I think the re-rating part of the trade has played out to my mind. But this represents sustained growth business. So I think one should be able to make returns in line with the earnings growth. And banks, I think, should grow their earnings medium term slightly ahead than the Nifty. So to that extent, I think there is still room for some outperformance there.
Who has the right to win in the financials?
My vote would be for the large, big brands that have scale, that have good technology platforms, that have a good CASA mix. And so my vote would be for, that's an obvious one. And there could also be other smaller niche companies which can do extremely well, like some small banks are doing quite well. But this clearly is the biggest piece where I think the outlook is quite decent.
When I just recall some of our conversations, and it is absolutely amazing that what we've discussed 2 years ago, 3 years ago, markets are recognizing them. And one theme which you've liked in your previous avatar was defense manufacturing. These stocks are commanding P multiples of consumer stocks now. Do you think from a market standpoint, this entire defense manufacturing or railways manufacturing has been played out?
I think again, in terms of the multiples moving up, they have played out. See, 2 years back, these stocks were between 5 to 7 multiples. And today, they are anywhere between 20 to 25 multiples. So I think the multiples re-rating has happened. But these are highly sustainable businesses. They have many growth tailwinds, both support of government, focus on indigenization. And I think the Ukraine war has also highlighted that you need to maintain large inventories of ammunition, because what you produce in a year can get consumed in a matter of days. And I think India also offers you competitive pricing for the technology what we deliver globally. I think the exports opportunity is also there, though it is smaller compared to the domestic opportunity. So I think, again, coming back, it's in a similar position as the banks. The re-rating has happened, multiples are fair, but you can make some money as the earnings or the business continues to grow.
All right, then it's time for us to slip into a short break. But before that, we at Times Network are back with our flagship event, India Economic Conclave, which is known to set the stage for driving India's economic agenda. As we move forward on the path of integrated equitable development, which is all-inclusive, all-pervasive, universal, and one that strengthens and not just the Indian economy, but also the global one as well. To pursue this agenda, the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from politics, global markets, economy, and corporate world. So get ready to catch the action here on Times Network. And it is an 18 Now exclusive. Sources state that Rajiv Jain backed GQG is raising its stake in Adani Group. And they have been buying stake in the group stocks over a few days. Now, sources also confirmed that GQG is keen in participating in Adani fundraise in the near future. Let's go across for more on this from my colleague Ajaya.
GQG Partners, the $92 billion fund, which had in March deployed close to $1.8 billion in 4 Adani Group stocks, have been buying the stocks additional in the last couple of days. We understand that around $250 million worth of additional purchases have been made in these Adani Group stocks by Rajiv Jain of GQG Partners, and we understand that institutional sales guys and bankers also tell us that he is also very keen to participate in future fundraisers as well. As we all know that around 21,000 crore worth of QIP or equity instruments is something which Adani Group is looking at to raise funds from additionally, and they've informed the exchanges around it. We are told that Rajiv Jain has actually given his interest to the institutional sales guys and bankers that in this additional fundraise as well. So basically he wants to raise the overall bet he's taking on Adani Group. So one was at that time when he had come $1.8 billion, around that time the fresh purchases was done, there were still some uncertainties. But after the Supreme Court verdict has come, a lot of overhang has been lifted, uncertainties have gone, and now it seems that this is the reason why he is keen to raise stakes. He calls them one of the best infrastructure assets in the country. In our previous interaction as well, when we spoke to him earlier, right after this big deal, but we are picking up from our sources that he may increase his bet on these 4-5 stocks quite meaningfully from open market as well as from the offering which are likely to happen from the company level.
The fact that Adani Group of stocks by traditional yardstick are expensive and that debt levels are high, as a fund manager, as an investor, what gives you the conviction that both the concerns which historically have been big concerns for Adani Group of stocks, those concerns according to you in your playbook is something which is manageable?
See, if you look at vast majority of the assets are regulated assets. They tend to a very, very long tail. So when you have, you can't have financial leverage along with operating leverage. These companies have very sort of predictable long-term trajectory, even if you slow down the growth. So that's the first part of it. And when you adjust for the leverage, in fact, if you look at the US utilities, and we own a bunch of them, on an average debt to EBITDA levels in US utilities, and these are some of the best of the breed, is around 6 to 7 times debt to EBITDA. If you look at the leverage here, it's around 3.5 times. But the growth capex is why the negative free cash flow kicks in. So I think they have predictable earning stream that has 20+ year visibility. These are regulated assets, and in growth utilities they tend to have negative free cash flow. That's the norm. That's, in fact, you want to have them. You want to have them have negative free cash flow. That means because they're able to deploy capital on a longer term basis with fairly attractive returns. So the debt levels, when you look from a utility perspective, is actually on the lower side, not on the higher side. But if they lower the capex plans, which they already announced, I think it becomes a fairly attractive sort of risk reward.
Right, that's an interesting take with regard to GQG Partners, Rajiv Jain speaking about his take on the Adani group of stocks. Let's quickly move on. We at Times Network are back with our flagship event, the India Economic Conclave, which is known to set the stage for driving India's economic agenda as we move forward on the path to integrated equitable development, which is all inclusive, all pervasive, universal, and one that strengthens not just the Indian economy but the global one as well. To pursue this agenda, the theme for this year is India, the emerging third superpower. IEC will feature the biggest voices from politics, global markets, economy, and the corporate world. So get ready to catch on all the action here on the Times Network. Move on though, we have Vamakshi with us in the studio after a while now, and Vamakshi is going to take us through all the stocks that are in news. Good morning, Vamakshi.
Well, good morning to both of you all. Well, yes, let's first start off with Ashok Leyland, an earnings candidate. The company reported an inline set of numbers. In fact, they reported a record high Q4 as well as full year revenue. Margins also improved for the counter from 8.9% to 11%, while the PAT came in much higher, almost 61% year-on-year uptick is what we're seeing. The company has become cash surplus, and they've also managed to gain market share in their truck and bus business. So overall, an inline set of numbers is what we've seen from Ashok Leyland. Biocon is the next one on our radar. All the numbers have been reported above the street expectations. It is a good beat as far as the margins as well as the PAT is concerned. Revenues did see an uptick of almost 57% on a year-on-year basis, while the margins have also gone up from 24.5% to 26.4%. Overall, a good set of numbers from Biocon is what we're seeing. Metro Brands, on the other hand, a weak set of numbers. The revenue did see an uptick of almost 35%, but the company's EBITDA margins have gone down sharply by almost 600 basis points from 32.3% to 26.4%. The net profit, however, is marginally down by almost 1% on a year-on-year basis. GSW Energy, this counter, has also come out with a weak set of numbers. Revenue did see an uptick of nearly 10% on a year-on-year basis, but everything has gone downhill from the revenue. EBITDA margin is down almost from 46.6% to 27.9%. The net profit has also seen a cut of almost 67% on a year-on-year basis. Mahindra CIE is the next one on our radar. We have reports from agencies suggesting that Mahindra and Mahindra Limited will sell as many as 12.1 million shares, or a nearly 3.2% stake in Mahindra CIE. This will be via a block trade. They've set the offer price as per sources at around 430 to 452 rupees a piece. Kotak Securities is the sole broker for this transaction, and on the back of this, watch out for Mahindra CIE. Paytm, on the other hand, is in focus. Paytm's Payment Banks Limited has received approval of RBI for reappointment of Mr. Vijay Shekhar Sharma as the part-time chairman for the company for a third term starting from May 23rd. Century Textiles is also in focus after the company, along with its results, approved a raising of funds of almost 400 crores via issue of NCDs. And lastly, keep an eye out on Shreyas Shipping. This counter has been in focus of late, and in fact, a board meeting is set to happen in order to consider the voluntary delisting of the equity shares.
All right, thank you so much for that, Vamakshi. We will be keeping an eye out on all the stocks that you just mentioned, and moving on to another stock that is that could be in focus today, and that is Dixon Technologies, as it reported a good set of numbers with a strong management outlook coming in for FY24. My colleague Vinny is joining us on all the con call takeaways. Vinny.
Good morning, and absolutely a strong set of numbers is what we've seen coming in from Dixon Tech in Q4 FY23 ahead of the street estimates. And in terms of the con call highlights, very bullish commentary that we've seen coming in from the management. A few of them, one, the management is highlighting strong revenue growth on account of the strengthening overall demand, acquisitions of new customers as well, and the growth, they said, will be aggressive in FY24 as well. Consumer electricals business, well, electronics business, especially of theirs, they're exploring new products over there, and they have received already a lot of orders on that front as well. Lighting segment also, the aggressive plan of introduction of new products in Q3 and Q4, and they've received export orders in the consumer lighting business as well, which is from Germany, which will be starting to, seeing the benefits in Q2 FY24 will be included from that as well. They're also in some early stages of discussion for our clients in the US and UK in the lighting segment as well. Mobile division, EMS division, which accounts to most of their revenues as well. In terms of that, also they've received large orders from a couple of clients, one of them being Jio for manufacturing, of which has been started as well. Dixon also is finalizing some other deals also coming in, and these two accounts which are there, they will account to around 4,000 to 5,000 crores in terms of revenues. Operations will be started in the next 5 to 6 months as well. So very bullish commentary also in terms of the PLI scheme, as well as for the laptops business as well, which will start seeing some of the benefits. That's why Morgan Stanley is maintaining a neutral rating, hike the target price to 3,370 rupees per share for the company.
Right, Vinny, and what we will do is we will stick with you. Let's talk about Varun Beverages as well. Incorporated a wholly owned subsidiary in South Africa, exploring business of manufacturing distribution of beverages. What does it mean for the company, Vinny? Talk to us.
So absolutely, when you just talk about it, what has happened, the wholly owned subsidiary, has been incorporated in South Africa by Varun Beverages. They will be looking to explore manufacturing and distribution of beverages. Now, let's not forget, South Africa is a 1 billion case soft drinks market. That's around 2.5 billion net sales approximately, and that is the size of around 45 to 50% in terms of the India size as well. When you talk about the South Africa market, currently Coca-Cola is the market leader over there with 60% market share. PepsiCo just has around 1% share, negligible share in those terms, while other local brands is the remaining share what is there in the South Africa market. Now, when you look at PepsiCo, the beverage company is the bottler for PepsiCo in South Africa, and the beverage company has around 10% market share, almost entirely attributable to its in-house brands as well. For Varun Beverages in Africa, obviously it operates in Zimbabwe, Zambia as well as Morocco. They have won awards for execution in Africa for PepsiCo as well. The management could be open to more organic and inorganic opportunities maybe in Africa as well. An acquisition of bottling operations could drive a value creation for Varun Beverages, and Varun Beverages has proven also a track record in terms of acquiring and expanding operations. So yes, a positive there that we could see coming in from Varun Beverages in terms of opportunities for them as well.
And Nykaa is expected to report its Q4 numbers with revenue and net profit lower than the estimates on a sequential basis. Vinny is here to tell us what to expect from Nykaa's Q4 earnings and what will be the factors to watch out for. Vinny, tell us more on this.
So in terms of numbers from Nykaa, on a quarter-on-quarter basis, we are expecting a downtick of around 11% in terms of revenues. Year-on-year basis, yes, we may see a growth. Let's not forget, October to December normally has festive season as well as wedding season, which supports the growth there. And Q4 normally is a seasonally weak quarter, especially in terms of the fashion business for the company. So yes, maybe that impact comes in over there as well. And, consumers' sentiment has been a bit of a spoil spot that we could see coming in for the company. Now, other than that, when you look at it in terms of the operational performances, EBITDA is down by 13% on a quarter-on-quarter basis. Margins are expected to see a contraction as well on a quarter-on-quarter basis, while on a year-on-year basis, we are expecting a growth in terms of the margins of the company. EBITDA margins are expected to expand on a year-on-year basis, mainly due to the management's cost control measures, as well as rather than chasing growth, they're focusing on improving the margins of the company as well. Average order values as well as other conversion rates are expected to be robust, especially in the BPC segment of the company as well, estimating the overall gross merchandise value to grow at 35% YOY, while QOQ basis we are expecting a decline there. For what are the factors to watch out for, the company has highlighted in terms of a bit of a slowdown in terms of consumer spendings, so keep an eye out on that in terms of the fashion business. Tier 1, how is the demand coming in over there? That's a factor to watch out for. And overall fashion business, how is that performing? Competition is increasing even in the business, beauty and personal care segment, so keep an eye out on that. And overall outlook going forward is some factors that we should watch out for.
Right, thanks a lot for all of that, Vinny. Let's quickly move on though. We have Ansh who is standing by with us. Ansh has been going through all the brokerage notes that have come to us through yesterday. And Ansh, talk to us about the key ones that you're looking out at.
Sure, Harsh. So starting with Godrej Consumer, HSBC has upgraded their rating on stock from hold to buy. They have also raised the target price from 960 to 1180. HSBC believes that the strategic focus of the company seems appropriate. However, the valuation is still inexpensive, but it looks reasonable. Hence, they see a good risk to reward ratio in the stock. Apart from that, watch out for Ashok Leyland. Nomura has maintained a buy rating on the stock with a target price of 184. The quarter 4 EBITDA margin has exceeded the consensus expectations driven by operating leverage and higher gross margins. Next stock in our radar is Dixon Technologies. Goldman Sachs has maintained a neutral rating on the stock and has raised the target price from 3060 to 3370. The company has beaten the street estimates after several quarters. They believe that the company is also seen as a major beneficiary of the Make in India initiative. However, they maintain a neutral stance as they believe that all of these positives are already factored in. So keep an eye on these stocks.
All right, Ansh, thank you so much for that. We will be keeping an eye out on all the stocks that you just mentioned. And then moving on quickly to our news fatafat, Mamata Banerjee's Trinamool Congress and Arvind Kejriwal's Aam Aadmi Party said that they would boycott the inauguration of the new parliament due on the 28th of May on account of the insult to President Draupadi Murmu, who was not allowed to inaugurate the building. And as Union Minister Amit Shah is set to visit Assam's Guwahati on Thursday, tight security arrangements have been put in place in the state's capital. He will go on a day-long visit to attend a program in Guwahati where the Assam government will distribute nearly 45,000 appointment letters to the newly recruited candidates of various government departments. And the Kerala story has garnered 203 crores at the domestic box office over 2 weeks after the film's release. Though the film's collection witnessed a slight dip on its third Monday, it has earned the status of all-time blockbuster.
Right, and on the global front, the US government has announced new sanctions on North Korean groups for what is said was the use of hackers to raise money for Pyongyang's weapons program. The targets of the sanctions generate revenue by stealing funds from global financial institutions as well as other entities, Secretary of State of the US Anthony Blinken said in a statement. Well, and you have Chennai Super Kings, which marched to their 10th final in 14 seasons, doing a lot of things right there, and overcoming table toppers Gujarat Titans by 15 runs. Chasing 173, Gujarat folded for 157, and this is the first time they were bowled out in the IPL. This was also CSK's first win in 4 attempts against Hardik Pandya's team.
And with that, it's time to wind down on this edition of Market Cafe. From Harsh, I, and the entire team that put the show together, thank you so much for tuning in.